Hello traders, this is a quick guide of the Cumulative Tick Volume Indicator and the user manual. The point of this video is to familiarize ourselves with the indicator as well as the user manual. On the indicator manual, you will see the table of contents. We're going to go through the manual together section by section. First section is the disclaimers, followed by a description of what the cumulative tick volume is, the tick replay functionality, minimum and maximum order size, and also all of the cumulative modes, which there are 3 different types of cumulative tick modes. So let's go through this. Here's our risk disclaimer and our description of the indicator. So the cumulative tick volume indicator is a tool used to track volume in the most efficient way possible. The CTV uses bid and ask data to display true volume sentiment in the direction of buyers and sellers. Using the indicator, we can determine with accuracy whether there are more sellers than buyers or more buyers than sellers. The most unique feature of the indicator is tracking institutional order flow. By segregating the small orders from the large orders, we can see the orders that belong to the institutions. We know this to be true because on average, retail traders do not have the account sizes or the buying power to place large contract orders. The only traders that can do this are the institutions. Using the indicator, you can see overall sentiment via executed volume order flow, as well as the institutional order flow. You will be able to see what the institutions are doing in real time and decipher whether the market can trade higher, lower, or just sideways based on this real-time volume sentiment. And what's unique about our indicator is that we can see this information in both a histogram and a candlestick view. Here on this chart of the S&P 500 futures, we can see that I'm viewing this information. Let's make this a little larger. On a candlestick view. I could also look at it in a histogram view, which we can see done on the bottom pane of this example image. Now, before we continue any further, we need to go over tick replay, which is a very important note. We must enable it. Tick replay must be enabled in order for the indicator to work on NinjaTrader 8. Let's follow these simple instructions. So tick replay is one of the best things that our good friends in the NinjaTrader development team have developed. This feature pulls up historical bid and ask data, which increases the accuracy of our indicators by 99.9%. The CTV uses this information to calculate bid-ask data that is accurate and valid. Without tick replay, this indicator set would not be possible to make, and it is the only reason it is available only on NinjaTrader 8. NinjaTrader 7 is still one of the more popular ways to use the NinjaTrader platform, but the NinjaTrader 7 platform does not have the ability for tick replay. NinjaTrader 8 is the only NinjaTrader version that has the possibility to use tick replay. So in order for the indicators to work, we must first enable tick replay. Here's how. First, we're going to go to our control center or control panel. Next, we're going to click on Tools. You'll see a drop-down menu, and then we click on Options. When we click on Options, we get this general window that pops up. So here's Options, and we want to go all the way down to Market Data. Once in Market Data, we're going to see here in the historical section, very last option is called Show Tick Replay. We want to make sure that that is checked. If it is left unchecked, we will not be able to use the indicators. So once Show Tick Replay is enabled, you will need to also make sure that it is enabled in your charts data series. So if we pull up any chart that you plan on using the indicator with, we need to go over onto this 3 square shape icon. When you hover over it, it will say data series. we can click on that and the data series will pull up. There's another way to do it. You can right click on any part of your chart and go over to data series. Once in data series, we'll want to make sure that tick replay is also checked off right there. If I have it unchecked, I will not be able to use the indicators. Once I have it checked, I know that the chart is using tick replay and it is able to load. Once you have it checked, just make sure you click OK. I personally am not going to click OK because I already have it enabled and we can see the indicator at the bottom here. Next up, we have what's called the minimum and maximum order sizes. Now, this is part of the indicator settings. And these settings control the range of order sizes. So we have two different settings. We have minimum lot and we have maximum lot. Minimum lot is a setting of, a minimum setting of 1 will look for 1 contract trades and greater. A minimum setting of 10 will look for 10 contract trades or greater. And this setting is customizable and any number greater than 0 can be used. The maximum lot is the maximum lot that will need to be larger than the minimum lot by at least 1. This setting sets the maximum order size of the range of order sizes you wish to look for. So think of it like this. If you're building a range of sizes, let's say 1 to 400, what the indicator is looking for are trades of 1 contract to 400 contracts. Anything greater than 400 contracts will not be displayed and will not be used as data for the cumulative tick volume indicator. If, say, I want to look for 50 to 2,000 contract trades, as I am doing here with the E-mini S&P 500 futures, we can see 50 to 2,000. Then the indicator will only look for 50 contract trades to 2,000 contract trades. Anything greater than 2,000 will not be used as data for the cumulative tick volume indicator. Anything less than 50 contracts will not be used as data for the cumulative tick volume indicator. Pretty simple, right? So all we're doing is creating a range of contract sizes. Now, hint, hint, why are we looking for 50 contracts and greater, right? 50 to 2,000 contracts. Well, the reason here in the E-mini S&P 500 is that 50 contracts or greater, the average person does not have the account size or the buying power to be purchasing 50 contracts at a time. If we take a look at the prices in the S&P 500 right now, it's 25.03 and a quarter. We know that the S&P 500 is, the leverage is 50 times the S&P 500. So if we just pull out a calculator here and we measure 50 times the price of the index, which is at 03 and a quarter, 25.03 and a quarter. For every 1 contract, we control $125,162.50. That's the leverage now. That's just 1 contract, right? That's just controlling 1 contract, and we know that the initial balance for 1 contract is about $4,600. So if I needed to buy 50 contracts, it's 4,600 per contract, so I'm going to multiply that times 50. So in order to place a trade of 50 contracts or greater, okay, minimum 50 contracts, I need at least $230,000 of capital, cash, in my account. That's number one. Number two, we figured that, 2503 and a quarter times 50 is $125,000. Multiply that times 50. And this is the amount of capital that we would be controlling with 50 contracts, $6,258,125. This type of capital, I mean, these numbers are not something that is achieved, or not so much achieved, but those kinds of numbers are not what the average retail investor is trading. Right, the average retail investor does not have over $6 million in their account. Very few do, okay, very, very few, but the institutions are the ones that have that capital. They have the access to millions and billions of dollars. 50 contracts is probably a drop in a bucket for these guys. And thus, I mean, the institutions, the hedge funds, the proprietary traders, the exchange members, these guys are trading these sizes of 50 contracts and greater. And we know they are the smart money. They are the ones with the capital. They're the ones with the means. They're the one with better information than us retail traders. They're the ones that we want to follow. So if they're buying the market, I want to buy the market. If they're selling the market, I also want to be selling the market. So this is what the Cumulative Tick Volume Indicator does. It allows us to see specific order sizes, which are customizable by the user, and we can physically see these in either a histogram form or a candlestick form. And that's what makes this indicator very powerful, especially in the futures markets. We can see the institutional order flow, and we can follow along if we want. But we definitely want to trade with these large traders and not against them. And let me show you how simple it is to just change a few parameters around. We're going to go ahead and right click on the chart, click on indicators. We're going to go to the proper indicator, this one here. By default, it'll say TMT, Cumulative Tick Volume, but you could actually change the label to whatever you want. So let's say I'm looking at the entire, let's say 500 to 2,000 contract trades, right? 500 to 2,000 contract trades. I can change the label so that I know what the contract sizes I'm looking for. So I'm looking for 500 to 2,000. The label, you can literally name it anything you want, or leave it blank, or just let it be TMT, Cumulative Tick Volume Indicator. Here I'm just going to put it 500 to 2,000. Helps me keep track of what I'm looking for. So here we're going to look for it in a candlestick here. Plot mode, we can see candlestick and histogram. I can view it whichever way I want. Let's do a candlestick, and we're going to leave it at daily cumulative. I'll go over what those mean later. So I'm going to go ahead and click OK and let the indicator load, let the chart load. Okay, and now that the indicator is completely loaded up, we can see what's going on here in the S&P 500. So 500 to 2,000 contract trades. We can see that not a lot of those kinds of trades happen. Here we can see one happening probably in the last few minutes of the day. Here we see another 500 contract and greater trade happen again towards the end of the day. This could be a big institutional firm or a mutual fund, someone coming in here either hedging or speculating. Here we can see a 500 contract trade followed by a 1,000 contract trade, a little greater than 1,000 contracts. And here again, this one around 12 p.m., they sold about 500 contracts on this bar right here. And I mean, if this isn't them covering that short, that short right here actually did rather well since it gapped down, and this person here probably lost quite a bit on the way down, but we can never know for sure what these guys are planning. But here we can see again, it's pretty boring, right? It's pretty boring. Here we can see someone definitely shorting around 10:30 in the morning. This is a 575 contract trade. Right on this bar here, we see another, let's see, 590 to 1150, little over 500 contract trade short at this level, and pays off really well the following day since the market gapped down. So this is just one example of how we can use the indicator. Of course, probably 500 contracts or greater is not the right way to go about it. We see very little activity, and usually if somebody's trading that large size, it could be that they're positioning themselves or possibly getting out of a very large position. We never really know the intentions of these traders when these extremely large orders hit the tape. If we just go back here to how we had it around 50 to 2,000, that would do us all a pretty big favor. So I'm just going to go ahead and click OK and let the chart load. Okay, now that it's loaded back up, we can see that we can see a lot more activity and a lot more accurate activity. 50 contracts is, the short-term trader, the day trader, and these are the guys we definitely want to be playing with if we are day trading. And here we can see 50, I didn't change that, I should change it, 50 to 2,000 contract trades. The label is just a label, right? We can name it whatever we want. If we want to put Raul or our first name, or hey, this is the cumulative tick volume indicator, we could type all that up if we want. It doesn't dictate the value of what we're seeing here. So 50 to 2,000 contract traders is what we're looking for right here. So here's a quick example. If I set the minimum to 50 and the maximum to 1,000, then I am looking at all orders that have been executed between 50 and 1,000 contracts. Right, that's kind of what we displayed through some live examples right there. And also, if I set the minimum to 3 and the maximum to 15, then I am looking at all the orders that have been executed between 3 to 15 contracts. Okay, you can pick any interval you want, whether it's 1 to 2 contracts, maybe just 1 contract trades, 1 to 1, maybe 10 to 20 contracts, maybe 10 to 100. The possibilities are somewhat endless. And a quick note here: if you wish to use this in the stock market, okay, this indicator is for NinjaTrader 8, but some traders choose to trade with NinjaTrader for stocks. All they do is use the connection from their account and directly connect it to the NinjaTrader platform, and they can see stock data, right? So if you wish to use this in the stock market, make sure that you account for the difference in leverage. For example, an order of 100 shares is not typically associated with large institutions, whereas an order of 10,000 shares or greater is deemed to be associated with an institution or hedge fund. In this instance, if I set the minimum to 10,000 and the maximum to 100,000, then I am looking at all orders that have been executed between 10,000 shares and 100,000 shares. Again, this is only for the stock market. Okay, let's go down the manual. And next up we have cumulative tick mode, and this is important. So there are 3 different types of tick modes. Each serves a specific purpose. And below are descriptions of each mode and an image in both candlestick and histogram form. Those images can be found on the manual. We'll take a look at a few live examples here of what we mean. And cumulative tick mode, there's 3 separate ones. So let's pull up the indicator settings here. Okay, and let me, just for my own sanity, let's adjust the little label. Okay, good. So cumulative tick mode can be found pretty much the very first option on the cumulative tick settings. And we have 3 settings. So if I click here, I have a drop down menu and there's 3 different settings. We have chart cumulative, daily cumulative, and non-cumulative. Okay, chart cumulative, daily, and non-cumulative. So what do these mean? Let's find out. Chart cumulative. In this mode, you will see that the total cumulative volume between the bids and asks, between the minimum and maximum lot trades within the total number of days specified in the data series. And I know that's a huge tongue twister, but pretty much what this means. Let's take a look at a chart cumulative. Click OK, and let's let the indicator load here. Okay, now that it's loaded here, let's have a look here. And we can see on the right axis we have values, right? And currently when we're in the positive values. So currently the market is actually sitting around, a little over 34,000 total positive imbalance is what we like to call it, because we're taking the difference between bids and asks. And if there is a larger imbalance on the ask side, we know that there's more buyers and sellers, thus positive number. And if there's a larger imbalance between bids, then we should see negative numbers, and those negative numbers equals more sellers than buyers. So right now we can see that there are, if we take a look at the data series, we mentioned the data series. Taking a look at the data series, I'm looking at 21 days. That's 3 weeks of data. So if I'm looking at 3 weeks of data, between those 3 weeks, we have made 34,000 total positive imbalance. So let me just read this once again. Maybe it'll start making a little more sense. So in this mode, you will see the total cumulative volume between the bids and the asks, between the minimum and maximum lot trades within the total number of days specified in the data series. So the total number of days specified in the data series is 21. You can change that to 100 days. You can change that to a whole year. Okay? And what you're going to be looking at, let's just say we do something crazy like 365 days. Okay? We look at 365 days. And what you're seeing is the total cumulative volume between bids and asks, between the minimum and maximum lot trades. So if I'm looking at 50 to 2,000 contract trades, I'm looking at the cumulative volume between 50 to 200 contracts, 50 to 2,000 contracts for the total amount of days that I'm looking at in the data series. Here I'm looking at 21 days. If I just scrunch this up, we can see, let me see that. Can't go any further than that, that's fine. But we can see that it always resets at 0. The very final day of trading is always going to start at 0, and it's going to continue to fluctuate throughout time for as long as the data series is, right? And here we can see that from the inception, or 21 days ago, here is how volume between 50 to 2,000 contract traders has occurred, right? This is what it looks like. And this is what it looks like on a candlestick view, right? If I wanted to take a look at this in a histogram view, I can do it as well. And here we can see an image of the histogram view. Pretty neat, pretty cool. You know, really depends on how you want to see it. Okay, let's take a look at the next one, which is daily cumulative. Now, in this mode, you will see the total cumulative volume between the bids and the asks, between the minimum and maximum lot trades within a 1 day or 24-hour session template, and resets to 0 every single day. So what do I mean by resets to 0 every single day? Well, let's have a look. Now that we see what what chart cumulative means, let's really now take a look at daily cumulative. So I'm going to go ahead and change it to daily cumulative. I'm going to go ahead and click OK, and let's let the chart load. Okay, so it's all set, all loaded here. And now notice how it looks different than it did before. And that's because it resets to 0 every single day. So let's take a look at this one. This is a great example. It's very simple to see when we're zoomed out this much. See where we ended? We ended the day all the way up here. But where did we begin the following day? At 0. Same thing. Ends either higher or lower, resets back down to 0. Ends either higher or lower, resets back down to 0. So it automatically resets every 24 hours. Every 24 hours. So let's take a look at a much more closer look. Should be a lot better. So here, having a closer look, we can see that on this day, we ended positive, more buying volume than selling volume. And also, on the following day, we reset back down to 0, ended with more buyers than sellers. And for today, it looks like we've reset back to 0, and we're just kind of trading sideways from here. Obviously, the market is trading higher, but the volume between the institutional traders is still sideways since we are currently in the Globex session. And that's daily cumulative. We can view that again as a candlestick, which is my favorite view, and as a histogram view. Remember, the value on the right axis is the difference between bids and asks, which will show you the volume sentiment in the current market, which is, of course, by the 50 to 2,000 contract trader in this case, and can be different if you choose to look at different specific size trades. All customizable. Really great stuff. Okay, let's move to the next one, which is non-cumulative. In this mode, you will see the total volume between the bids and the asks, between the minimum and the maximum lot trades on a bar by bar basis, meaning that the volume difference between the bid and the ask will reset to 0 after the close of the current bar. And this is a really interesting look at the indicator, because we're not only looking at it as a cumulative mode, we're actually looking at it in a non-cumulative way. And what's really interesting about it is that if you have non-cumulative mode set to candlesticks, you really get a unique look. I mean, right now it looks like a histogram, but this is actually candlesticks. And I'll show you what that means. So let's take a look at non-cumulative candlestick, 50 to 2,000 contract trader. I'm going to go ahead and click OK. And again, we'll let the indicator load. Okay, now that the indicator has loaded up here, we can see it's super strange, but it's a very unique look. Let's zoom in here. So what we're looking at is the total cumulative volume between the bids and the asks, okay? between the minimum and maximum lot trades on a bar by bar basis. Let's take a look on a more active session, since this is still the overnight session, what we're seeing right now live. So here in the on this past day, we can see that on this bar right here, we had a little bit of selling from the 50 to 2,000 contract trader. On this bar right here, we had a little bit of selling from the 50 to 2,000 contract trader. This one had a little bit of selling, and then this one right here had a whole lot of buying by the 50 to 2,000 traders. This one has some buying, this one's some selling, this one's some buying, and you can see how it works, right? It's on a bar by bar basis, which means it resets to zero every single time, which is really unique and really cool, especially when we look at it in a candlestick view. So here's something a lot of histograms don't do. Histograms typically don't have wicks either at the lows or at the highs, right? Histograms usually look just like that one right there, right? It's from its zero base and lower. And even if the value of this bar here went as low as down here, on histogram view we'll never ever know, because it doesn't leave a wick behind, right? You literally have to see it trade all the way down here and then coming back up here in order to know that on this bar it actually traded down here but ended up all the way up here, right? Obviously that's not the case for this bar, but that's kind of the case for this bar. This bar actually, the value during this period actually traded as low as down here, but it closed right there, and we can see a wick behind at each individual candlestick or bar, which makes it really unique. If I look at it on a histogram view, it's not going to be the same, right? We're not going to have tails at the highs or at the lows, and you know, that's a little bit of information that, you know, might be a little bit useful for you, right? Could be a little bit useful, and thus really cool to always have, you know, non-cumulative in a candlestick view over a histogram. I will always choose candlestick over histogram when it comes to non-cumulative. So it's pretty cool stuff. What's really cool also is that you can actually have separate sets of the indicator. You don't necessarily always have to use, you know, the indicator on one instance. You could have multiple instances of the indicator. And here we can see non-cumulative at the high here, and then we have a cumulative, a daily cumulative in histogram view on this bottom pane. And this is another indicator we use to calculate breakouts. We're not talking about these. We're talking about these two panes right here. So we can see, you know, definitely a lot of buying on this day from the, you know, everyday trader. 1 to 20,000 contract trader is right here. We can see a lot of buying, buying from the institutions. Here's kind of a little bit flat from everybody. You know, couple sections where we saw a lot of buyers. You know, some sellers here, and a little bit more selling here from the institutions as well. So you'll notice that a lot of times the institutions also trade in the same direction as the overall market. And that's because the institutions are also part of the overall market. Unless you're, you know, in these instances, if we take a look right here, I have 1 to 20,000 contracts on histogram view, daily cumulative. On this other section of the cumulative tick volume, I'm looking at a non-cumulative tick view, and this time of 1 to 20,000 contracts on a candlestick. So I'm looking at the same players. I'm actually just looking at it in a different view, right? Shows a little bit of a little difference in information. Right, and if I wanted to, let's make this interesting. Let's take a look at the non-cumulative view, and let's make it 50 contracts to 20,000. Let's click OK and see what happens. We're gonna have to let this load for a little bit here. Okay, we have it loaded up here, and now we're looking at 50 to 20,000 contracts. So literally 50 to just everything else. 20,000 right there. And here we're looking at 1 to 20,000. We'll just put a K next to it. And here we can see that there's a little bit of a difference between the 1 to 20,000 and the 50 to 20,000. For example, we can see that the 50 to 20,000 contract trader was actually buying, okay, 50 contracts and greater were actually buying on this bar right there, versus the overall market actually selling that bar. So that's an interesting divergence here. We can see buying together here, we can see buying together and then selling together. Same thing here, the overall market was buying this bar, and the 50 contract trader was actually selling on this bar, or at least more sellers than buyers. There are many ways to interpret this information, and the best way to learn how to interpret is to definitely swing by to the live trading room or schedule a one-to-one mentoring session with me, and I can go over how to anticipate and how to analyze this data correctly, because there's the right way to do things, and there's always a wrong way to do things, of doing things. So let's so here's two ways of showing separate information and how we can use it to our advantage. Okay, so what I want to do now is thank you guys for trying out the indicator, test driving the indicator. Any feedback that you guys have of the indicator, I greatly appreciate it. And if you'd like to get, as I mentioned just a little bit before, if you'd like to get one-on-one training on the cumulative tick volume today, make sure you visit the website www.themarketprofile.com. Scroll down to the section where you can schedule a one-to-one meeting with me, and you'll get personal training on the cumulative tick volume. We also build a personal trading plan that is customized to your specific goals and your account size, which is an important part of every single trader's journey. We all have different account sizes, and my account size might not be necessarily the same as your account size, right? You might have less capital to work with than me. Then again, you might have a lot more capital to work with than I do. And building a trading plan based around your account size is very important. Not only that, but I also answer any questions on any of our other indicators and any trading questions as well. Once again, thank you guys for downloading this wonderful indicator, and happy trading.